love the channel and find it useful in becoming a happy retiree. Subscribe today. There is I'm not going to say it's a loophole, but I'm going to call it a donut hole. And there is a large group of individuals, I would say. This is not a sliver of a half of a quarter of a percent. We're talking about potentially 1 million folks in the state of Georgia. 1 million taxpayers in the state of Georgia, and these are my rough estimations, that are going to see a change on the Georgia tax side. So we've talked for months and months and months about the federal tax side. I'm very confident in saying 90 plus, maybe 95% of Americans are getting a tax cut on the federal tax side. Georgia, if you're listening, and a couple other states like Kentucky that have really low standard deductions could actually see a tiny or somewhat substantial tax increase on the state tax level, not the federal tax level, but on your Georgia tax return. Here in the state of Georgia, we're not like Tennessee or Florida or Texas. We actually have a state income tax. It's about 6% for most Georgians. So we have to pay that every year, and we do our federal tax return and we do our Georgia tax return. And this new GOP tax bill actually brings up a really interesting question that will make your taxes on the state side a little bit more technical, a little bit more complicated. And I want you to beware of this change so that when you do your taxes and you sit down with your CPA, you're not missing what I believe is a new, potentially unintended consequence of the new tax bill. And we're going to go through that math and go through those numbers here. So here's what I need Georgia taxpayers to think about. During my research on all this tax reform, I discovered this, let's call it a small yet impactful change that could adversely affect hundreds of thousands, I don't know, maybe 1 million taxpayers in the state of Georgia. And let me explain. About 30% of American taxpayers itemize their deductions when they do their taxes. That percentage will likely decrease under the new GOP tax plan because the standard deduction is effectively doubling. But what about state itemized deductions? And here's where this donut hole may prove costly for some taxpayers. So in most states, Georgia is one of them, tax rules state that whichever deduction, standard or itemized, that you use, whatever you use on your federal return, you've got to do it on the state return. It's not every state, but most states. So for residents in states with high standard deductions, like let's say 10,000 or higher, this rule may not make a big difference. But in states like Georgia, that has a really low standard deductions, $3,000 for a married couple, Georgia's like that. Kentucky's even lower. Itemizers lose the ability to take their itemized deductions on their state income tax return if they choose to switch to the new higher federal standard deduction. Bottom line is that folks in these states or states like Georgia may see a state tax increase. It may not be dramatic, but there's a potential to see your taxes go up on the state side if you choose the new higher standard deduction. So you've got to be careful, particularly if you're itemizing close to, I call these very high borderline itemizers. So you've really got to be careful when you do your taxes and make sure your CPA does it multiple ways to make sure the combination between federal and state, you figure out the best way to do it from a deduction standpoint. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.